Today I've got a special guest for us. I'm going to give you guys a quick little backstory on my brother Ramon. If you guys read a little bit of the bio, I think you guys need to get fired up and get excited for him here. So I met Ray, part of a mastermind of the DM group. You guys know I had Mark on a week ago. That's where I met Ray. And I remember this dude walking up to this mansion we were at, you know, Mark's house, and the dude's wearing like shorts, right? Completely ripped, but he wasn't fronted. Ray wasn't wearing any fancy watches, didn't have any fancy gear on. He didn't roll up in a fancy ride. And I'm like, who's this homeless guy? What is going on, right? I get to talking to Ray and realize he's by far one of the smartest guys in the room. See, Ray's not just a practitioner of real estate, like a lot of the guys that I know. Ray actually went to school, understands finance, understands currency, understands lending, understands this stuff at a different level. So when I have dialogue with Ray, it was an instant connection. Both of us private lenders. Ray has done a lot of multifamily stuff, syndication stuff. He's been in real estate for a very long time. Ray is also one of those guys who's absolutely obsessed about things. I noticed Ray is a little bit intense, kind of like your boy Humblebee. Why I like Ray is this. Number one, if he decides to have a six-pack, you'll never not have a six-pack, right? He's like the original 75 hard. Anywhere we go, Ray puts us to shame. So if he goes hardcore on a subject, kind of get out of his way. So when I talk to Ray about money, something he's very passionate about, I know I'm getting very, very, very good intel. And that's why me and Ray are good boys. Ray is 90s hip hop, badass, hardcore, right? Me and him cut it up a lot. We have really good dialogue. Don't fuck with him, right? He's one of the original lifestyle business owners that I know. Got a beautiful, beautiful babies. And he actually just had his daughter when we were there in Florida. We were at his house literally the day his wife went into labor. We were hanging out. We got a cool privilege of hanging out. I brought Allison with us. We're sitting at the house, and his wife's like, "I'm gonna give birth." Ray's like, "It's cool, baby. It's cool. We got this. We just want to talk in the thing. It's cool." And she's like, "Literally, my water's breaking, Ray. We gotta go." So gave birth that same day. So the dude is super cool, super friendly, and I'm thankful that Ray's here with us today. So I'm gonna go ahead and just bring him on, let him introduce himself real quick before we dive into it. We'll do some Q&A at the end, guys, of today's call. So feel free to get your questions ready. Today, we're gonna be talking about all things. We'll hit some personal development. We'll definitely hit real estate. We'll hit capital markets, financing. And we're definitely going to spend some time giving you clarity on the crypto space, because a lot of you guys are like, crypto, what is this thing? And I think this is probably the only call you ever need to be on to get clarity on the subject matter, so we can do what it's going to do and then stay focused in our lane, but understand as the world moves. So Ray, welcome to the call, man. Thank you so much for being here, my brother.
Guys, happy to be back. Thankful to be back. Last time I was on, grateful to Ben and be back. I was like September, I think it was September, August. I was in Destin. We were moving around Florida, figuring out where we wanted to be in Florida, and we ended up here in Bonita Beach. So, but it's kind of funny how it went full circle, because I started getting into talking about crypto. I started getting into other assets at that time to understand the market really at a higher level, what was happening. And then from then till now, it's been all about understanding markets, market cycles, and everything else. I guess let's start, Ben. Where do you want to start with? You want to start with the story of the real estate, how I started, and then kind of like fill them in?
Yeah, that'd be great. Give us the 20,000-foot view of the last 15 years of your,
sure,
let's say, career as an investor, as
sure,
a lender. Just give us a breakdown there, some
sure,
of the stuff that you've done.
What's interesting, Ben had a good point. I was blessed to be formally educated in economics. My degree's in economics. And then I went to General Electric for 2 or 3 years on their financial management program. So I learned financial management at a corporate level. And again, I'm not saying this to impress you, just I graduated top of my class in economics. Why? I just fell in love with it. I took all these advanced economics classes. I was way out of my league because I fell in love with the beauty of markets and market cycles. And it's the only thing I still use today out of school. It's economics to understand markets. So I did that at GE, quit that, and then I started buying apartment buildings in Connecticut. Moved back from Connecticut to Miami, sold the apartment buildings in that cycle in 2005, 2008. So I was able to take some profits, move back to Miami. I wasn't able to buy and hold anything, so I started wholesaling. In Miami, wholesale about 200 to 300 properties in Miami from 2008 2008 to 2012. And then 2012 started buying and holding again, wholesaling as well as fixing and flipping as we built the business. So we did 3 different time. 2016, had my first daughter, and I said, this business isn't working out anymore. Can you guys hear me? Yep. You guys can hear me? Yep. So I said, this business isn't working out. It was stressing me out. Hiring people and everything else really wasn't serving me. So what I ended up doing is saying, hey, you know what? I'm going to go ahead and sell some of these properties. So we had about 70, 80 rentals in Miami. We sold, cashed out. And at that point, so what are we going to do? Then we started becoming lenders. So more like hard money lenders. We started lending money to different people in different environments, everyone that we already knew in the business, because we had been doing this since 2005 to 2016, 17. So 16, 17, and 18 is when we started selling. We started increasing the wholesaling and fix and flip business at that time. But around 2018, we exited completely. So that transition from 16 to 2019 was a transition to full-time lending. So we started living off interest income, doing loans. And I said, hey, you know what? This is kind of transactional at that point. So I said, let's go do some bigger multifamily deals. So we bought a 60-unit multifamily in Buckhead, Atlanta, Georgia. And then we did a 996-unit building in Indianapolis. So almost 1,000 units in one transaction. That was last year. That was a $96 million transaction. And then we're fixing that unit up and that building up and then looking to rent it. And we're selling the Atlanta deal right now, which puts me about where we were at when we spoke last time in September. And I just saw the market, the deals I used to get. So for example, that big deal we did in Indianapolis, we got a great cap rate. It was in the middle of COVID. The rates really made sense. The interest rates were a little bit higher, but the deal, we got a great deal and a great asset. And as time progressed during COVID, I noticed that the prices in real estate were getting higher. And as the prices in real estate were getting higher, the returns were getting lower. And then the general partner was taking more of the deal, leaving the passive investor, because I wanted to be passive and free up my time to spend that time with my family. They were taking more of the deal. So what I saw, everything I do has to be based on risk-adjusted returns, not just a deal. No, I'm looking at the risk. And what I saw in real estate for those multifamily deals is there was more people coming in, the debt got cheaper, so they were paying more prices, and it was becoming harder and harder to collect. So I saw more risk, which is totally fine. I'm okay with high risk deals, but I want the return to be there. And if it's not there, then I have to go look somewhere else, right? That's my fiduciary responsibility for me and my family. So as I saw that happening, it just didn't make sense anymore to do that. Now, I'm always looking for real estate deals. I love real estate. I look all the time. But if the deals don't make sense, I don't want to be in a position where I'm forced to do a deal that doesn't make sense. So the kind of like, I want to stop there, but I know I said a lot. I don't know if you have any questions on there so far.
Yeah, man, let's touch on some stuff. What I'm going to do, Ray, I'm going to vamp with you. Could me and Ray have these calls, guys, that you just wish you were a fly on the wall? And I used to watch other people have these kind of calls, and I'm like, shit, I wish I was a fly on that wall. All right, so what Ray's not telling you to a degree here that I want him to kind of touch on is Ray is not the guy who's putting on work boots, going to flip houses, going to do any of this stuff. Ray is able to find a way to arbitrage deal opportunities, a lot of times via a mastermind group or people that he knows that I know. For example, I know there was a deal that one of our buddies was putting together, a large multifamily. He had to come up with $4.5 million in a weekend. And I know that he was like, that's when he banged the phones for 48 hours straight. And he realized the difference between wanting to put a deal and having to put a deal together. And I know that you came in and you completed that transaction and made a very nice rip for yourself. And also you're able to help him. Can you talk really quick about the power of JV relational capital? Because this is one piece we'll get on before we get into money markets.
Everything is relationships, right? Everything in any business and any capital side is relationships, even whatever it is, right? Because you can go and figure it out all yourselves, or you can stand on the shoulders of giants, which is kind of what I'm proud of all of you guys for, to standing on the shoulders of Ben. But understand that Ben has giants he stood on, right? So, and everyone does that, right? So on any asset that is, You want to bank on the relationships. You want to bank on, because otherwise you got to figure it out yourself, and that's not fun. Like, you can go further together. So even as I look to explore something new or new markets, I have relationships. And if I don't have the relationships, I part with dollars so that I can get those relationships and that I can make the learning curve happen faster. There's no way around, guys, doing the work. No way around that. But you can have a coach and he can help you do the work, right? Same thing like in the gym. You can have a coach and they can tell you what to do, the nutrition, and obviously you got to put up the work, but it really shortens the curve, and you can achieve mastery a lot faster.
So you're doing the real estate stuff, right? And you're connecting with guys, you're having a lot of dialogue, got the wholesaling business kicking. By the way, who'd like to do a couple hundred deals in a few years? Not bad, right? So cranking along on that stuff. Obviously, you're always doing the hard money side of things. So as we navigate through that, we start looking at the markets, and what happens is, just like it did in Canada, the US market got hot, the return got less and less. So Ray starts exploring new opportunities. Ray, can you talk about your view of the marketplace and how it shifted over the last couple of years, and how it's kind of led?
I mean, Ben, the biggest shift was right during COVID, because what I saw happen in COVID was more risk. I saw more risk in the marketplace. And what should have happened is liquidity should have dried up. Remember, I've been in this game 16, 17 since 05. So I went through the first cycle, and when liquidity dries up, that's when guys like Ben and I come in and say, all right, where are the deals at? We got the private money lined up. But what happened is that only happened for a period of 30 days. Then the floodgates of Federal Reserve money and bank money opened up, and the government money opened up. So, and happened in Canada, happened here. So all of a sudden, these assets that I thought should have been priced lower started getting priced higher. Capital, instead of getting priced higher returns, you started seeing lower returns. So me as a lender, normally, you might charge 13% and 2 or 3 points. You were seeing deals get done for 7, 8%, 9%, because there was more capital on the street, but what I perceived as higher risk, right? So at that point I said, all right, this doesn't make sense, because if I'm going to go further out the risk curve, I want a higher return for that. So, okay, so what's going on? So then I had to reassess. So a lot of the loans started paying off, and I said, let me just pause here and see what happens, what goes on. Then I saw prices keep on getting higher and higher, but the fundamentals weren't there. Like on all these assets we have, to collect rents has gotten exponentially harder. I've had to hire more people, and hiring people got more expensive, and you're still not able to collect, and then you're not able to evict. So guess what happened to all my investors that rely on me to provide, not on me, but rely on the buildings to provide cash flow? They weren't getting their cash flow anymore, because if the tenants aren't paying me and the buildings, we are not able to pay them. So all of a sudden led me to start to explore, okay, what's really happening? What's going on here? And what I learned is, what's really happening is they're devaluing the value of all fiat currencies. They're devaluing the value of the Canadian dollar. They're devaluing the value of the US dollar. And that's what's causing these asset prices to increase exponentially. So consumer goods might not be going up as high, right? If you're going to buy a new TV or new Apple or whatever, that's not going up. But if you want to buy an asset or a business that produces cash flow, you're paying a lot of money for it. So that's the denominator is what's being tricked. And then once I started to understand, okay, well then what led me to, well, then I go, well then if the denominator is being devalued, okay, cool. I need another ruler. Because if my ruler is messed up, then I got to get another ruler. All right, cool. Well, then my new ruler has to become the G4 balance sheet growth. How much has the Federal Reserve or all central banks grown their balance sheet by? So if that becomes a new ruler, now I've got to measure all returns against that. So if I measure the Canadian stock exchange, the US stock exchange against the growth of the balance sheet of that country, you'll find that all returns stayed flat. So if you adjust the number of money growth, the real estate hasn't really gone up. Stocks hasn't really gone up. There's one asset class as a whole, which is the crypto asset class, that has outperformed the Federal Reserve balance sheet growth. There's one asset class. Now, I'm not judging. Guys, I'm agnostic. I don't care what I buy. I love real estate. I love gold and silver. I love crypto. I don't care. But what's happened is the hurdle is no longer 3-4% inflation. The true asset price hurdle, the things that we all want to buy, is 13 to 15%. So if that becomes the new hurdle, then lending money at 12% isn't going to keep up with inflation, isn't going to keep up with the stuff that we want to buy. So I'm looking for something that's going to outperform that.
All right. Dude, love it so far. Where's the economic lovers in the room? You guys are like, okay, shit, he came with a heavy hitter today. I'm going to break it down just a little bit for the people like me who failed math a couple times. You know who you are. You're in the room. Maybe it wasn't math. Maybe it was PE. I don't know. Sean just dropped out in grade 3. So I'm just going to break it back.
Well, here's a good way to think about it, guys. Is the ice cube of which is the money, is starting to melt at a much faster rate than it used to.
Chris, sit here. I'm gonna go.
Okay, so
buys you less and less and less.
So let me get into this real quick. So, basically, guys, and I'm not going to paraphrase, I'm just going to clarify for my own sake. So I want to make sure I understand the logic here. As we print more and more money, you realize it becomes less and less valuable, right? The US government does a bailout, more money in the system. Canadian government's doing bails out, serve checks, more money in the system. That money that's in the system is looking for a place to hide. So when you look at real estate prices, you look at all the money being printed, it's looking for a home, somewhere that it can stabilize and somewhere that it can find some safety. So when you see real estate going from an 8 cap, Marla sees this, apartment buildings, down to a 5 cap and a 4 cap and a 3 cap, the returns are getting less and less because people keep pumping into it. And as the supply stays low, well, the price just keeps jacking up higher and higher. So what's interesting about this is a bigger kind of macro viewpoint. Some of you guys are going, get smaller, but let's stay macro for a minute. What's interesting here is, all right, so then what's the alternative? We're all flipping houses. We're all trying to stack and rack. People who are literally saving cash are probably losing it the fastest because it's just being printed at astronomical rates. I remember, right, and correct me if I'm wrong, was it 700 billion that was printed during the 2008 economics? It was 700 billion.
That was the first one. That was TARP.
That was the first one.
And that was a lot of, supposedly that was a lot of money. 700 billion is, you can't even like that. That's like, we're in the trillions now, baby.
We're in the trillions. So we went from 700 billion, which was a big deal, to 1.9 trillion. That was like last week's news. So I'm just saying the money that we're chasing, guys, is running further away from us. So Ray, take us to the next level here. All right. So
I guess what I want you guys to understand is that it's not inflation in terms of like this crazy inflation. It's devaluation of the currency. So there's a little bit difference. The money in your pockets, the savings, the things that you're working towards. So as you flip a house, well, then you've got to get rid of that cash quickly. You've got to cycle that money to make it work for you. It can no longer sit in your bank waiting for opportunities because that ice cube is melting a lot faster than what it used to. So you're holding a hot potato that got way hotter in the last 2 years.
Is this making sense, everybody? So to me, Ray, this kind of makes a couple different cases. Number one, the case for holding real estate to a degree makes a lot of sense because if money's looking for a home and it's hiding and you have real estate, well, the likelihood of people keep dumping money into that asset class is still relatively high because there's not alternative options. So the price will just keep going up. And there's many, many reasons here. So if you own real estate, you don't need to get rid of it.
No, and I would say,
people, go ahead.
Yeah. So within real estate, I love real estate as an inflation hedge too, right, guys? Because if you have real estate to the extent that it's highly levered, meaning you have debt, let's say the reason asset prices are going up. So I'll give you an example. This deal we bought in Atlanta, 60 unit deals, bought it for 8.6. We're selling it for 10.7 right now. The reason the value went up, we didn't collect more. We were never able to execute the value add plan. We bought it pre-COVID. The reason someone's paying us a lot more is because our debt costs are at 4.6% interest. They can come in and borrow under 3%. So because they can come in and borrow under 3%, cap rates have gone lower and it gave us a multiple. But understand the economics of that deal didn't get any better. We weren't able to implement any value add and raise rents. What happened is we just got lucky during the market cycle that cap rates compressed because the Fed printed so much money that the rates fell. And then as the interest rates fell, cap rates fell as well, which then drove prices to rise, right? So it's a function of the debt. The debt's gotten cheaper, the value of the asset gets higher. So what is the plan this new buyer's coming in? Well, I'm gonna only put down 20% and I've in essence bought a bond against inflation because I'm going to pay back that debt with cheaper dollars in the future. So to the extent real estate's a great play, to the extent it's highly levered and the rate is fixed or it's a low rate loan and you can continue to pay that off with cheap. So I guess what I'm really wanting to share with you guys is to change the mindset, Ben, and this is going to be really, really key, guys. Real estate is no longer the asset. The asset is the debt. I'm going to say that again because it took me a while to get it. The asset is the debt, because you can pay it back with cheaper dollars and it serves as a hedge against inflation, and you get tax benefits on that debt. That's the asset. Now, sure, you want the real estate to cover that, but the asset is the debt. Make no mistake about it.
Look at that, an interesting dialogue, right? We're always thinking, you know, perspective shift, right? Clarity on some of this stuff. Who's a little bit lost? Cool. Just let me throw a hand up if you're a little bit lost. Okay, cool. All right. Did you think this was going to be your first day of counsel? You're like, oh crap, I thought we were going to do whatever, right? So again, very valuable dialogue. So
and guys, it takes time. It takes time to change your mindset and your perspective. But if you don't, when the game changes, you have to change the way you look at things, because otherwise you're going to be taken advantage of in the old game that no longer works. This old game of save your money and, hey, the house is the asset and the real estate is the asset and get it paid off, that no longer applies when they're printing the crap out of this money. And they're not even printing the crap. That's inaccurate. They're devaluing the savings. They're devaluing the currency. That's what's happening.
So
counsel, brother,
we'll get the Q&A in a second.
Tell you that.
Hold on, we'll get the Q&A in a second here. So let's go a little bit back and forth here for some clarity and a little bit of fun here. So Ray, I'm a real estate investor, right? I'm coming into this thing, you know, going, okay, great. I'm going to buy real estate. I'm going to hold it. I'm going to flip it. I'm going to wholesale it. I'm going to whatever. I think all of us that are in real estate are really trying to be business owners. Other than a very, very short, you know, small group of people who strictly want to invest their capital and never do anything, we're looking to create some actual cash flow, create some actual businesses. For me, the case for aggressive pursuit of profit has never been more important. I think a lot of people like taking the relaxed approach. I'll just kind of park some money. And I'm not talking like large amounts of money, but somebody who literally just lets it sit, whether it's like, hey, I'm not going to take on debt. I'm not going to take on whatever. I think we need to be intentional about pursuing profit. So if you're creating a wholesaling business, whatever type of business, time to get aggressive with this stuff. It's not time to really play small, because I think there's going to be some big opportunities for people that are really assertive in this marketplace to be able to take advantage of what most people truly just don't understand. So we'll get to the crypto thing in a little while, but Ray, let's talk about the market cycle, right? We have a lot of combinations of stuff. Now we have a hot market cycle. There's still tons of money on the streets. You know, the pullback that we were expecting didn't necessarily happen. It's not 2008. The difference is, I remember 2008, the money dried up. It wasn't money, right? So even if I wanted to borrow, it wasn't that accessible. Today, there's tons of money.
Today there's more money, right? So
yeah.
Initially, when you had this thing in March, April, May, liquidity dried up. But right after that, they opened the floodgates of liquidity. They gave money to the people directly. You never had that happen in our country, where you circumvent the treasury and you go direct to the people through the money, right? That's never happened. UBI, right? On universal basic income. That's what the new unemployment is. This whole new unemployment is starting of UBI. So people aren't working. So, you know, if you look at what's happening right now, companies have had to pay people more to get them to go back to work. There's a shortage of truckers. People, I mean, people that work at Costco, anyone who does manual labor, restaurants, you can't hire people, but there's a whole bunch of them unemployed, but you're paying them money to sit at home. So that money is going to go somewhere. So you haven't had a liquidity crisis, which normally is what happens. So you've got a bunch of money chasing things. And then on the real estate specifically, you've got people that don't have to make payments. Some of them, they can get a forbearance. So they haven't made payments. The banks have a ton of cash. The banks are sitting on a ton of cash so they can forbear, right? They don't have to foreclose. And they've been told to forbear, right? Hey, listen, we're going to remove your reserve requirements, meaning you don't have to have any money when you create money. You could do these loans for free and just make 1%. I go to a homeowner, I'm a bank. I go to a homeowner and say, hey, listen, just pay us 1% interest only. We're not going to do anything. Just pay us 1%. And most people are going to say yes to that deal. So I don't know that you're going to have this big 08 debacle, because the banks have more cash than they've ever had. And they're told specifically by the Federal Reserve, hey, forbear, or we're going to take your banking charter. So that's how the game's going to be played. Now, are there going to be some opportunities? Sure. And you've seen some of those already, but they're not going to be in high class properties in Toronto, right? Like you're not going to see these opportunities in, you know, class A and B apartment buildings in nice cities. You're going to see them in the stuff that got hit bad, retail, right? You're going to see them in, where else? hospitality. Like you're going to see, if you can get creative and do opportunities there, that's where you're going to see opportunities. But if you look at, so the opportunity is going to be very selected, in my opinion, in the sectors that got hit the hardest. But if you're looking for prime real estate and prime location that everyone's chasing with records amounts of cash, I don't think you're going to see opportunity there because the banks, again, like I said, they've been told to forbear. So I think real estate's a great strategy to the extent that you can, fix and flip, wholesale, make money, and then look to be smart about how you invest that money. For me, wholesaling and fixing and flipping was always a tool to buy time and to stack up cash to then look for passive investments.
Powerful so far. Powerful so far. Right, guys? Give me a nod. Give me a hand. Okay, so far. And we'll get to some Q&A in a little bit. There's a lot I'm throwing at you. Who needs to rewatch this later? Just the first 20 minutes. Marla's like, yeah. All right. I love it. With Dale's not writing, I know it's serious. Okay, because Dale would take a couple notes.
Yeah, I'm just looking at some of the comments. I agree with you guys. If you can borrow fixed rate debt or even not fixed, if you can borrow and you know how to use that capital to make more capital, that's a great time. It's a great time to refinance, take some of that equity, or sell the properties you don't want to hold as rentals. A lot of guys are selling properties that, this is a good rental, but you always have some of these dogs that are underperforming and you sell them, right? Or you don't have a big prepay or defeasance on those properties. You can sell those, cash out and do something with that cash, or refinance, right? Whatever it is you want to do long-term.
Now this will tie back into, we talked about minimum viable lifestyle. So Ray, I give this theory, like I live on X amount per month. And as my income increases, I don't allow the income creep effect to happen to me. So, if you're making 10 grand a month, you decide to live on 5, you live on 5. When you make 30, you still live on 5 and you take the difference, the 25,000, and you invest it towards things that grow. So, in terms of like our house, we bought a house, let's say it was 300 grand 7 years ago. We just sold it for just shy of $1 million. Well, we're like, hey, there's no point of keeping this thing. Now the Windsor market's gone up, let's say 30% a year over the last 3 or 4 years. So the question is, can you generate a higher return on that capital than the 30%? In some of our mortgage portfolio, we've got mortgage deals at 9, 10, 11%. 9, 10, 11 is not attractive in today's marketplace. So we're actually closing that whole portfolio out and we're selling it. So when you look at return on capital, Ray, somebody sitting here goes, okay, I've got equity. Maybe my market's going up, maybe it's stagnated. If somebody had 50, 100, 200 grand of equity, what would you give them? Maybe 2 scenarios. There's the aggressive Ray, and then there's the, financial advisor Ray, because I know you're kind of catering on the other end these days. Give me 2 pieces of advice.
Yeah,
so I think the first one. So I don't frighten cool beer, but I don't bore Mark Smith.
Yeah. So there's 2 thoughts. One is, according with the market cycle, what season of the life you're in, right? Like when I was with like how Ben and Dre are, my risk tolerance was way higher. I didn't have 2 girls to take care of, right? Like, so my life was different, right? And I wasn't running a family office. I was running a few $1 million and we had to make the most out of it. So I had to run that car red line pretty hard. But as the assets grew and as you grow, you still want to capitalize, right? You still want to make some money on that. But my risk tolerance has come down because I've got, my life has changed, right? So you've got to figure out what season of life you're in. So going back to Ben's point, I agree with the late gratification, as you make more, less spending, but that's also good for a certain part of your life. But then you get to a part of your life, right, where you're like, dude, I want to enjoy some of this. I want to live beachfront, right? I want to enjoy my life, right? So that's kind of the stage of the life that we're getting into right now, where I still want to grow this, but also enjoying it and valuing my time and spending time with my girls is equally as important, and spending time on my health and fitness and just stuff I like to do, right? Like I'm competing in a powerlifting competition. Well, that takes a lot of training and effort and time that I hadn't done before. So like these other things that you start to value. So really, because the purpose of money is to really enjoy your life, right? So I think there's a season of not grind, but there's a season of spring. There's a season to plant, and that's a priority in that season. But you don't want a life full of spring. A life full of spring is freaking boring. Let's keep it 100, people.
Dude, straight 90s gangster right here. Okay, so let's flip the script on this bad boy. On a scale of 1 to 10, guys, with your hands, how much do you know about the crypto? What's your confidence level? 10 being I'm a super genius. One being, I don't know anything, and I let my 5-year-old daughter handle my account. Okay, a lot of ones. There's a 6 in here. I'm not talking about your dating life here. I'm talking about what you know about crypto. Okay, all right. Okay, got it. Okay, Ray. By the way, Ray can go super advanced or otherwise. Can you start us, Ray, and just give us a breakdown as you see this marketplace, the crypto space, maybe just kind of edge us into it, and then we can take some more advanced questions as well. And then
let me tell you what got me into crypto.
Go for it.
Because guys, I wanted to rock real estate. Guys, real estate's been good to me. Like I made all my wealth in real estate, and I've done very well for myself. I'm not trying to brag or boast, just the truth, right? But when I saw more work for less return, I said, I have to look somewhere else. And then I started looking at data showing me that how return in the stock market and in real estate, by the time you factor in all the money printing and the growth and you measure it against the Federal Reserve balance sheet, it had gone nowhere. So once the new hurdle became 15%, I go, hold on, I got to find something else. So I started looking all around, gold, silver, everything I could find. And the only asset class that outperformed by a long shot the Federal Reserve balance printing was crypto. So in terms of crypto, real estate got cheaper. The cars I wanted to buy got cheaper. The houses I wanted to buy got cheaper. So if I change the denominator, then it got cheaper. So I said, all right, let me look at this. Let me understand what's going on in the whole space. Guys, what's happening there is blockchain. Blockchain isn't going anywhere. Blockchain will have the same impact that the internet had, if not bigger, on the entire financial markets. Real estate will get tokenized in our lifetime. Because now what you can have is a piece of real estate. Like, let's say I want to buy a piece of real estate in Ben, what's a famous building in Toronto, or a famous condo somewhere up there in where you live?
Let's call it CN Tower. We all know what the CN Tower is.
CN Tower. I want to buy that, right? I can't buy that because it's one person. But if I can put it on the blockchain, verify ownership, and then make a whole bunch of little small pieces, everyone can own a little bit of it. And it's all verified. The blockchain is a triple ledger entry accounting system. There's no mutability, meaning think of a fly and it lands on a trap and you can see everything that happened. That's why the central banks don't like the whole crypto, is because there's no lying in it. You can't, it's immutable. So you have triple entry, and all these computers are doing is making sure that whatever one person says is actually being validated by multiple people, right? So it's a triple entry ledger accounting system. You can think of it like that. And it's not going anywhere.
Can you explain what blockchain is? Who needs to know this? What is blockchain? All right, there you go. I'm gonna break it down just a little bit, Ray, for everybody as we kind of learning the stuff together.
Sure. So in the whole crypto space, there's cryptocurrency, and then there's crypto, let's call them crypto assets. There's a few currencies looking to be currency. Bitcoin, Litecoin, a few other, and those are really looking not to compete with the US dollar or the dollar. They're more like serving digital gold. They're more like a store of value. Like what gold is in the traditional world, there's a few currencies in that space looking to be currency. The rest of it is technology. The overwhelming majority of the blockchain space is technology. It isn't trying to be currency. The power of the blockchain is just that. It's fully transparent, fully recorded, and fully decentralized. Meaning no one person has control. The control is decentralized, so it works bottom up, fully decentralized system that cannot be messed with. Does that make sense?
Yeah, okay. So give us an example of how somebody would use blockchain to transact, perhaps.
So let me give you an example right now of what's currently happening right now. Right now, there are these things called DEXs, decentralized exchanges. What happens there right now, 24/7, there's a marketplace that I can go and exchange one token, which is kind of like a stock, for another stock. And I settle instantaneously, and it's a bearer asset, meaning I can take the asset off the computer and into my hardware device, and it stays with me. So you have 24/7 markets operating right now where Ben and I can transact, and then Ben takes whatever currency I give him, I take whatever currency he gives me at a fraction of a cost, and we settle instantaneously. In traditional markets, when that happens, one, it doesn't work on the weekends. It's not 24/7. When it settles T plus 2, today plus 2 days in the future. And then if you want to get a wire from then, you're waiting another 2 days. None of that happens here. And by the way, in the traditional banking system or stock market, somebody else has custody of your assets. Here in the crypto world, you have custody of the assets. You can take them offline, very much like storing gold or silver in your own personal house.
Let me hit on that. That's a powerful concept. So guys, if I go to the bank with a check, the check has to clear that transaction. They may advance me the funds the day I walk into the bank, but really the money hasn't moved. Does this make sense? They're the custodian of that money. What Ray is saying is that I can literally walk around with a check and I can just go, here you go, Ray. It's instantly Ray's. It is powerful. Imagine
and I can take it, and again, I can take it off the computer and store it offline. So again, there's security. There's no counterparty risk. There's no counterparty risk. And what's happening right now with these financial markets, people are seeing, hey, I don't trust Bank of America. Hey, I don't trust us. So this creates, you don't have to trust people. Everything's verifiable here. Like, I don't have to trust Ben now. I do trust Ben, but I can trust the system, right? So it becomes a trustless system of a way to do business where everything is verifiable through the blockchain.
It's powerful. So imagine, guys, where I want to wire money to Ray. I want to send Ray $1,000. Through the blockchain technology, I can just send it to him instantly. And here's the cool part. Ray can literally take the currency, let's just say, out of circulation. Think about this for a second. That's like you taking the dollars in your pocket and you're going, I'm removing these from circulation.
That's so like you know what it's like? It's like you taking that physical cash out of the bank without ever having to go anywhere. And the transactions are 24/7 and they settle in 10 seconds or less, and they cost less than $1 to send anytime.
So just think of the sheer cost saving. A wire cost us $50 as Canadians, right, guys? So if I want to do a wire, I go to TD Bank, I spend the $50. It takes 2 days for it to actually go through. And there's there's time and there's cost. What this does is it removes time because it's instant, and it reduces the cost down to $1. Guys, tell me a world where people don't use this technology.
Guys, blockchain is going to eat middlemen for lunch, and not just in finance, in art, in music. Ben, I know how you love music and NFTs and art. This thing is eating middlemen for lunch because now the producer of music can go direct to the consumer. And not just that, but if I'm a producer like Ben and I produce art, this whole NFT craze, well, then I can say, hey, Ben, you produce this song for someone, and hey, I'm going to sell it to you, but I want 20% of this song if it ever sells again. That gets recorded on the blockchain. If that song ever transfers again, you get paid on that as the artist. That's why all these artists are coming over. Guys, you have an industry right now that's going to disrupt multiple industries because it's going to do what the internet did to these other industries. It's going to eat these middlemen for lunch. Banks don't like it because they make a bunch of fees, bank fees, this fee. They don't like that. So if you go over here, guys, you can make 8 to 15% on your US dollar or your Canadian dollar just sitting in the account.
So let's touch on this. Here's the question everybody wants to know, including Marla. How do I play this? What do I do? This is all new. This is fresh. Ray, how can somebody play this? Let's go a couple different angles, the conservative angle and then the more aggressive angle. Give us some insight so we can at least get some folks started with thinking in this direction.
I think the first thing to do is obviously get educated on the space, right? Understand what it is, understand what's going on. There's a bunch of companies, just like there was in the 1999 internet boom, right? There's going to be a pets.com. There's going to be an amazon.com. They're all looking to solve different things. The space is highly volatile, but volatility does not mean it's speculation. This is the wave of the future. It's just very volatile because that's how it is now. Did you guys know Amazon in 2001 went from $100, 2001, from $100 to $6? Did that mean Amazon was a scam? No, it was just a new market. It was a new industry. So this is how that industry is. So again, it's exponential. You're investing in, this is like venture capital, exponential curves, right? This is not real estate. So the first thing you got to do, guys, is, do I want to be in VC or not? Because everything in this space right now is venture capital, right? Do I want that in my portfolio? Do I want something that has a chance to go 10x, 20x? And guys, I know I'm sounding crazy when I say a 10x, but that's very common in this space. Why? Because you're investing early and you're investing in disruptive tech. So yes, is there a downside? Yeah, it's probably 10 to 1. Because when there's a correction, like right now, there's a big correction, it could drop 50, 60%. But if you drop 50, 60% and you're up 10x, you're still up 5x.
So let me hit you with something, because Ray, I think this is how I play this whole thing, guys. In life, I think people like Warren Buffett understand the power of illiquidity, meaning putting something in that you can't touch for a period of time so that it can mature and materialize into something meaningful. If you, in my opinion, if you are entering any kind of VC space, whether buying a company, buying a crypto, or buying an equity, a stock, you got to be willing to go for the ride to get to a reasonable conclusion and outcome.
And Ben, that's a great way of putting it.
Can you touch
That's
on
a
that?
great way of putting that. And the question is, do you want the ride? The ride's going to be volatile. Like I'm telling you, like if you can't not stomach the volatility and you can't stomach, hey, I put in went to 3 or crap. When I first started, I put in 200 and it went to like 20 G's. I lost 98%. But that same thing today, the one that the Cardano, which is the one one of the ones I invested in, that thing today recently got up to like $2 and something. Now it's back at $1. But again, it's not going anywhere. So that's just kind of part of it. Like in Amazon or in Apple, you would have had 80% plus corrections. It's just part of the storm. It's just part of this ride. So you got to decide, A, do I want to be on this ride? And B, what's my risk tolerance, right? What's my risk tolerance? And do I want part of this? Again, this will be part of everyone's life. There's people just playing this as a stable coin. They take their US dollars, they convert them to USDC, which is the equivalent, but a digital dollar, right? So they convert them to a digital dollar, and then they just earn 8-10% interest on that. And that's a great return for idle cash that's sitting in your account, guys, right? This banking system is paying you 8% on your money, whereas in the traditional banking system, you're not getting any of it. So a lot of that money from the traditional banking world is coming over here. What's happening, guys, is we're leaving Europe and we're going to the Americas. And what's happening is the first people are coming over, Christopher Columbus and all these people, but eventually big boats are going to be bringing people over. There's going to be cruise. Eventually what you're building right now is a parallel financial operating system. That's what's being built right now. Now, is it ready to catch the old? No, but eventually they're going to merge together. That's why you hear the central banks talking about centrally backed digital currencies. That's coming, but they're not going to create the rails. They're not going to create the infrastructure. These private companies like AWS with Amazon, they're going to create the infrastructure and the rails for the new banking system, the new insurance system, the new stock market. That again gives power to the people, and it's fully decentralized. That's what's key here, guys, is that this is magical, that this gives power to the people in the first time for everywhere, and you're taking it away from these old hierarchical established institutions that when the Federal Reserve prints money or money comes into the system, it's called the Cantillon effect. The people closest to the money benefit first. They get that money and then they go out and they buy stuff because they know what's happening. And then the people at the bottom, they kind of get, they get inflated away. It's called stealing money from old people slowly because they devalue their currency.
Yeah. This reminds me a little bit of Thomas Edison. Anybody watch The Men Who Built America? Anybody watch that documentary series?
It's a good one, yeah.
The Men Who Built America. Go watch it. My buddy Tim watches it every Christmas. Thomas Edison invents the light bulb, right? And obviously it's not good for people who sell all the other products that we use prior to light bulbs, to heat your home, the coal, etc. Especially not good for JP Morgan and his railway. But they had to build the infrastructure for the lighting system so they could actually use it. Niagara Falls was actually one of the first power plants in this part of the world. Romania was the first. There's a city in Romania, I think it's Timișoara, was the first city in Europe to actually have full power. My point is, everybody was like they're against the light bulb for such a long time. They wanted to prove it was dangerous. They even tried electrifying a man, and he actually didn't die. Well, he did eventually, but he didn't die through the electricity. They just roasted the guy. My point is, when it's new and it's disruptive, the tendency is to push back. And this is the theory of early adopters. Just like when I started wholesaling 3 or 4 years ago, early adopters, people go, that's a scam. 3 or 4 years later, everybody's doing wholesale. So I'm not saying you need to move your entire nest egg into this area. What I'm saying is if you're going to speculate with a portion of your capital, it's the equivalent to me of buying, let's say, stocks in startups. No different to me. Like if you believe that the future is going to be here, whether it's now, next year, or 20 years from now, there's a component to this where you could end up 10, 20, 50, 100, or 1,000x. Bitcoin went from $1,000 roughly to 50,000. Just think about that.
Bitcoin was under $1
originally, yeah. But I remember looking at it at $1,000.
Oh, okay,
like,
okay.
This didn't go overpriced. This is crazy, and then it goes to 50,000, right? So I guess right here's the piece for everybody. This is good combo, right? We'll get into Q&A in just a second here. Okay, so people who are, as you said, get educated, number one. Figure out what you want to do, number two. If you're willing to do the illiquidity of it, I think it's valuable. Where are people going to get burned on this? Is it in the short-term nature of getting in and out, just like any other?
Where people get burned is traders get wrecked, and if you leave your coins on the exchanges, you get wrecked. So wreck means you're gonna lose your capital. So again, or you invest in projects that are scams and rug pulls, they call them in the industry. So you definitely want to stay away from the tokens that you haven't done research on, like Dogecoin and all that crap that people talk about. These are crap tokens. There's legitimate projects that are doing legitimate work, and you can study the founders and see what they're up to. Understand, this is venture capital that gets priced to market daily. Traditional venture capital, you didn't get priced to market. You just invested in Amazon before it was Amazon, and you didn't see a ticker, right? So here the ticker's there every day. So don't try and trade it and hodling. If you held Bitcoin or any crypto asset that had strong fundamentals for more than 3 years, you'd have been up, and you'd have been up exponentially. Understand that we're investing in exponential trends. So you're looking for exponential returns. So if someone told me, hey, Ray, you can make 15% here in crypto, I'm not interested. I can do that in real estate. But hold on, you're saying I can make 10 to 1? I have a 10 to 1 odds here, 20 to 1 odds? Yeah, and more if I can hold long term. And hold on, then I can create cash flow streams from crypto. That sounds pretty interesting, because the name of the game for me was cash flow. I just didn't know I could do it in the crypto world. But now figuring out that I can create cash flow in the crypto world, I'll tell you what, it's very nice. It pays very consistently, and there's no tenants to deal with. It's just technology, and it pays on time, no headaches. So I like that.
So walk us through real quick before Q&A. How does somebody make cash flow on their crypto? See what I did there?
So there's a couple ways to make cash flow on the crypto. One is you could lend it to other companies, and then they, in essence, do what a traditional bank was. When you put your money in the bank, your money is the bank's liability. I know it's your asset, but it's the bank's liability. The bank then takes that money, makes 10, 20 times that money and lends it out. They go make a whole bunch of money on your money, and then they pay you back that little bit of money, but you're taking on all the counterparty risk, because now your money's not in your account, it's theirs, right? So you could do that in crypto. I don't recommend that, but there's people that do that, and there's different companies that do that, BlockFi, Celsius. There's different companies that you could send them your capital, and you make a return on that. There's other companies that you can, in essence, stake your token. You can keep control of your token, and they pay you for helping process transactions in the network, but you retain control of that token. So in essence, the token stays in your wallet, and they pay you a return for allowing them to validate transactions on the network using your tokens, right? But the tokens stay in your wallet. So you're in essence providing the blockchain with security, and in return, they're paying you some of that. There's different protocols that are serving as a traditional CD. You put up capital, and to the extent you want to time lock it, they pay you a higher return for that. So there's different things you could do to generate cash flow depending on your level of risk. If you're going to have a more illiquid and longer duration investment, then obviously the return's got to be higher for that. And if you're going to have a shorter, more liquid investment, then the return's going to be lower. But what's very interesting about the whole space is they don't pay you in US dollars. They pay you in their native asset. Meaning, let's say the company is Cardano. Cardano pays you in their native token called ADA, right? So, okay, I'm making ADA, but I was buying ADA at 15 cents. Well, ADA today is at $1.15. Well, guess what? They're paying me 5 to 6% a year, paid out every 5 days in their native token. But their native token has gone up since I bought it 10x. So now every time I get those new tokens, it's a big difference. So when I first started investing, that cash flow could not cover my lifestyle, but now it does. So you get this price appreciation because everything in that world is denominated in their native currency. Guys, understand the issue here. The issue is the denominator in which you live your life is being lied to you, whether it's a Canadian dollar, the US dollar, it's lying to you. You're using a dummy scale that changes the numbers on you. It's a bad metric. So if you start to denominate your life in something other than dollars, where the currency is flat, use gold, use something else, then you start to really see what your actual returns are doing. And like I said, the biggest thing is, as a whole asset class, forget what investments you're making specifically, crypto destroyed the Federal Reserve balance sheet growth. It outpaced it by multiples. I mean, it was ridiculous what it did. And here's what's happening. Crypto is a bet against the legacy financial system. It's an insurance policy against the legacy financial system. The more they print, the more they messed up ABI and send checks and screw that one up, the better this one does. The more you have shit like Robinhood and people getting rug pulled, the better this does. So this is people looking for a solution. And guys, make no mistake, the sharpest minds in business, in finance, in cryptology are here. They're not anywhere else. Guys are leaving Wall Street and getting jobs here. You have polymaths, geniuses, mathematicians here. This is the way that this is not going anywhere. Now, is it going to be volatile? Yes. Is it going to be ups and downs? Sure. But make no mistake, this is where everything is headed.
Awesome. Awesome. Let's get into some Q&A here with you guys, and we'll keep this moving forward here. So throw a hand up real quick. I see some in the comments. What I'm going to do is I'm going to bring Ali on first. By the way, quick shout outs to some of our C5s joining us today. You know, we got Taraj, Depot, Ian, Dwayne, Adrian, Deji, Igor, Rob, Julian, Paul, Stacy, and Greg all joined C5s. Yeah. So we're giving them a taste.
And I think the first steps, guys, would be open an exchange, whether it's Binance or Coinbase, wherever you like, open an exchange, and then wire money in, and then see what you want to buy. But make sure you take your money off the exchanges, whether it's a Trezor. Make sure you store those tokens and that you learn how to take custody of those tokens, because security then becomes key. Because now it's a bearer asset, meaning you take possession of it, like gold. Hey, you go buy gold. Why would you give it to the bank? Questions?
All right, let's hit it. Let's keep going on this. Okay, Adrian, did you have a question?
Yeah, I mean, I've heard a bit about like wallets and storing. I really don't know much about crypto, to be honest. And I understood a bit of what you said, but I'm still pretty lost. So in terms of how to get started, what would you say is like the best resource, or like what's your tips on getting started?
I like there's this company called Real Vision, and they have a free crypto. So Real Vision Crypto, and it's free. They've got a lot of experts on crypto there, and you can kind of see different companies, different protocols. YouTube is a great teacher for this space. I definitely recommend in terms of wallet. Think of a wallet, guys, as just wallet you have in your kind of like your traditional wallet, but it's a kind of wallet on your phone or a wallet on a Trezor. A Trezor is just like a little USB device that you can store your coins in, and then you have a security phrase that you don't want to give to anyone, and you store your tokens there, right? You store whatever tokens you have off the exchanges, right? So that's pretty much what a wallet is once you buy something on an exchange, then you take it and you take it off the exchange into your own wallet.
Can I ask a second question? I know Dwayne's waiting. Just real quick, what happens? I've heard stories of people forgetting passwords to their wallets and things like that.
Well, remember, so that happens. It's like storing your gold in your backyard, digging a hole, and then you forget where the map is. I mean, that happens. Again, the upside comes with some extra work. Right, because we're early, guys. We're still the pioneers. We're still early in the game, even though it seems the returns are crazy. We're still early, and there's going to be many bubbles, and there's going to be a lot of 50% corrections, and that gives you a great opportunity to come in and buy cheap, right? As long as you're ready and you have time, get educated, put a little bit of money in. But yeah, I mean, the responsibility is yours. This is giving power back to the people. So then, but also to get power back, you're going to have to take some of that responsibility. They go together.
Love it. Dwayne, you're next, buddy.
Thanks, Ben. Yeah, so down the States, you guys can do a 1031 on your real estate. So I'm just wondering, with the Bitcoin, can you 1031 that into real estate? And is there anything available to us in Canada that will be similar to that?
So Bitcoin is meant to be digital gold in the space. Bitcoin is a cryptocurrency. I wouldn't necessarily call it a crypto asset. They're not new technology. Bitcoin is old tech, and Bitcoin does three things well. It's deaf, dumb, and blind. It does settlement and security well, and liquidity. There's a lot of liquidity. So if you're Tesla and you want to buy a bunch of Bitcoin, that's fine. But understand that Bitcoin isn't a play on blockchain and technology. Bitcoin is just digital gold. That's the best analogy I could give you. So 1031 is generally for real estate, more a commodity. It's not real estate. So I don't know that those two are, how I marry crypto and real estate is the gains from crypto can be offset by investing in real estate and then using the depreciation in real estate to offset your crypto gains. Okay. That's where they marry. Or you could use an IRA or whatever to invest in crypto, but understand that crypto is not real estate. So they're different. So 1031 applies to more real estate and things like that.
Okay, great. Thanks.
Boom. Let's go to Courage, and then we'll go to Cool Beer, and then Fernando. Is this cool? Everybody good? All right. You tracking? Okay, go ahead, Courage.
Thanks, Roman, for everything. Question. First of all, would you transfer some equity, to crypto right now with this situation? And if you do, how you do it?
Would I transfer some equity to crypto?
Yeah, like let's say you have an equity, in your house, right? And let's say you want to, transfer 100 grand, right? Without going to the bank. How are you going to do it?
Equity in my house. The only way I would do that right now, the rails are not set up yet where you can, that I know of, where you can create, eventually they'll be there where you can create, where you can say, hey, I have this equity in my house, it's verified in the blockchain, then you can tokenize it and then sell some of that, right? That's not here yet right now that I know of. But it's, again, it's coming. If I had a house and I wanted to invest in crypto assets, I would refinance a house, or I would get a line of credit against the house. I would take that cash, send it to an exchange, and then buy whatever I wanted to buy in the crypto world.
All right, great. So such a thing doesn't exist right now.
Not that I know of.
Mm-hmm. Thank you.
But I'm sure the sharpest minds in finance are working on it.
Yeah, because I got into crypto about 2-3 months ago. I have a friend, who's basically investing since 2016. So I got some info, but I didn't know if you can. I thought, maybe that's possible. There's a solution for that. I mean, guys, but it's not for now.
We're so early in this space. I was telling Ben, he's like, Ray, how do people know you pay taxes on here? I go, Ben, these exchanges aren't issuing 1099s yet. They're not issuing reporting yet. Like, that's how early we are. It's just, we're way early. And what happens, the reason bubbles happen, bubbles are a human thing. We overestimate what the tech can do before it can do it. Like in 99, we thought that the internet was going to change the world, and it did. We just needed to wait so that till there was a faster internet speeds, and then it changed it. But that took 10 to 15 years. So we overestimate what it can do. That's what happened in 2017 as well. But the tech is there and it's coming. It's just, we're going to have bubbles because humans front run what the tech can do before the tech can do it.
Right now, nobody liked, Elon, with the 1.5 billion a couple of months ago. And then he basically devalued, his own, stock and everything. And everybody was saying, that Bitcoin is gonna, stop at 40, but then it met for, 35, and it came down to 30. So a lot of people, they're saying, it was a game actually for Elon itself.
It is a game. Remember, Elon's made more money off Bitcoin than he has selling cars ever. People don't know that. Elon's never made money selling cars. Elon's made money on tax credit off cars. He's made more money in crypto than he's made in cars.
Yeah.
That's profound.
Thank you.
Thinking. Profound. Let's go to Fernando. Looks like Kubir is frozen. Fernando.
Yeah. So obviously there's like everything else on the internet, there's a bunch of good information and bad information. So where's the best place to educate yourself on all this in terms of crypto, whether it's currencies, assets, things like that? Because you hear different opinions about putting things in exchanges like Coinbase and those different things. Some people are like, yes. Some people are saying no. You just said start there, but then make sure you take it out and pull yourself. So where's the best place generally, or the best way to educate yourself on the whole space?
Again, I like Real Vision. So I've been a lot of education on Real Vision. They have a free crypto channel. They do a non-biased look. And it's also what's easier. Sure, there's guys that say, hey, take everything. There's also like Bitcoin maximalists. Hey, take everything off the exchanges. Never give anyone your personal information. Never do this. Never like there's like, there's always these militant people. And then there's like, dude, I still want to have a family. And okay, yeah, I could go raw vegan and never have a meal, but like, dude, you know what I mean? I like my chocolate cake. So you've got to find what's right for you. So what's right for me is, look, I get it on the exchange and then I get off. I make sure the exchange is reputable, right? Make sure the exchange is legit, and then get it off. So, but there's also, you don't have to get it on an exchange. You could go directly to Uniswap, right? You could you can buy through a broker, right? There's a lot of ways to get money into the space. It's just how many hurdles do you want? How many layers of hurdles, and what's your anonymity level? There's some guys that I want to do everything under the scene. I want to hide all my addresses. I want everything. I'm like, guys, a lot of guys are doing this like to not pay taxes. I'll pay taxes on everything I make. I have no problem with that. KYC me, like KYC means know your customer. AML me, like, dude, let's do that. I'll give you all my stuff, but let me do what I want to do because I'm going to pay my taxes. Like, I don't have a problem with that. Right. So that depends. And again, I like Real Vision. You can find some good people on YouTube that you like. Just stay away from the extremist. Oh, only this, only that. Dude, all of these protocols eventually are going to be interoperable. Like right now, I don't care if Ben is using a Mac or a PC or whatever phone he has. Right now, I want to get on this phone and talk to him. Eventually, that's going to happen in crypto. But you have all these silos. People aren't talking to each other. But that's what happens when you have a new industry. That's just people fighting. There's like, it's crazy, right? But that's what it is. But it's also a feature because the ones with the best network effects are going to win. The ones with the best community are going to win. Remember, this is power to the people. So the ones that people choose and put their money up, that's the one they're going to bet on. That's the horse that's going to win. So you have a game where they put up the money. So now if you have a bunch of investors in this one token, they're more incentivized to push or shill that token, because if their token wins, right, what a better game theory than to invent it around money? You know what I mean?
Love it. I lthink Let's take a couple more. Catherine had a question, and then I'll go to TJ. Catherine, did you want to share your question here?
No, I think thank you, Ray. This has been super helpful because I didn't have a clue about any of this stuff before.
Sure.
You've made it more accessible, which is great. And thank you for the recommendations on where to get information. I will be looking into it. So thank you.
So you're welcome. Yeah, definitely. Education is key, and there's plenty of time. Someone asked a question about meme coins. Stay away from that. Like if you see it on Twitter and all this, stay away from that, right? Look for good companies with good founders. Most of these founders are accessible. They have their own YouTube channels, and just kind of look at the project, do your homework, understand what it's about, understand the protocol, understand what is the problem they're looking to solve. Can they actually go to market? What's nice about the blockchain is everything's online. So if someone says, oh, I've done this and that, I can go on GitHub, which is a website, and you can check all the updates. What are they actually doing? What are they actually implementing? What's their track record, right? So what I love about this space is everything is verifiable. There's no, oh, I got this return. No, show it to me. Let me see it on the blockchain. That's what's beautiful. There's no lying here. So it becomes a trustless system. Ben and I could do business where I don't have to trust Ben, because the contract does that for us. And it's verified.
We'll take two more here since we got a couple of seconds. John, how do you use crypto to purchase real estate?
How do you use crypto to purchase real estate? You find someone that wants to accept crypto, whatever crypto asset for the real estate. So again, real estate is the buyer and seller. If you have a buyer willing to accept Bitcoin or Cardano or Ethereum for their house, done. Or you can invest in the currency. So for example, had you invested in Bitcoin a few years ago and you want to buy real estate today, well, that real estate priced in Bitcoin is going to be way, 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 way cheaper, because Bitcoin has outperformed all other assets, not Bitcoin, the whole crypto in general as an asset class has outperformed all other asset classes, big time. So in terms of if you price it in Bitcoin, that house or that real estate got way, way cheaper. So that's a way to think about it. Can you please talk about the function of Ethereum? Okay. So now let's get into smart contracts. Ethereum, think of Ethereum as an application where developers come and build things on. So this concept of decentralized finance, AKA DeFi, is being built on Ethereum and other platforms. So there's several, Ethereum's a layer 2 solution. What that means is there's protocols that are looking to say, hey, I'll be the platform, I'll be your IBM, I'll be your Microsoft, you build your platform on top of me. Yes? Okay, Ethereum works off a proof of work algorithm right now. Ethereum is moving to proof of stake. So Ethereum is a platform where a whole bunch of developers build on. Think Apple iPhone store, and developers come then build on it, right? But the problem with Ethereum is transaction on Ethereum, the gas fees are ridiculously high. If I want to do a trade or a deal on Ethereum, it's clunky, it's slow, it's old tech, it's the BlackBerry. So what's happening is developers and other companies are saying, hey, there's a problem here, so we want to solve this. Well, Ethereum's already proven that proof of work. What is proof of work? Proof of work is you've got a bunch of mining computers, hash power, somewhere in China or different countries, a bunch of computers solving algorithms and problems to mine Ethereum. That's how they mine and create Ethereum. You solve these algorithms and then you create Ethereum. Massive, massive warehouses full of computers, ASIC computers solving problems. That's how you mine Ethereum. Ethereum has figured out that, hey, we cannot scale this on this model. We're going to switch over to a proof of stake. Proof of stake works off consensus. Consensus is more a model of saying, hey, all the people that hold our tokens, we're going to let them choose and where they want to delegate their tokens to, and we're going to work off a consensus model versus a proof of stake model. The energy usage is way, way less, and it's way faster, and it can scale. So when Elon did that tweet of saying, hey, I'm no longer doing Bitcoin because I want to find things that are less than 1%, all proof of work concepts got hurt, but proof of stake concepts, which Ethereum is moving over to, got help. So like Cardano is a company, it's another layer 2, layer 3 solution. They're launching their own version of smart contracts at a set cost on a proof of stake model. So Cardano took the approach of saying, hey, we see all the issues because the founder of Cardano was one of the founders of Ethereum, saw the issues and said, hey, we're going to fix this. And here's the fix. So they're going to launch that recently. And that's one of the companies that I'm heavily invested in, for full disclosure. And I believe in what they're doing. And they've spent 4 years figuring out proof of stake. And now they're going to launch that. And I believe that that technology, once they launch it, is going to be revolutionary. So, but that's what Ethereum is.
Amazing, amazing. Guys, this is a powerful, powerful combo. Ray, I know we're kind of at top of the hour here, everybody.
Let me leave everybody with one.
More?
Yeah, let me leave. I'll take that one question, but let me leave you guys with something. Some data here, because Ben likes data. This space right now is $1 trillion. It's peanuts. 1.6 trillion. Bitcoin's close to $1 trillion. This is going to go, my opinion, 10 trillion, 100 trillion. Right? Right now, it's a very small space. Gold is 10 trillion. We're talking about 1 trillion. This is not a big space. So that's why it's that volatile. But over time, it's going to be less and less volatile the bigger it gets. And the bigger it gets, the more these companies and institutions are now forced to buy it. So this is something where the little guys like us can come in early before they come in. Once they come in, the returns are going to go away. They're going to kind of normalize, much like they did in the internet. The internet onboarded people at 65% per year. This thing is onboarding people at 113% per year. We can't even wrap our heads around the next 4 years what this is going to do. It's onboarding people almost twice as fast as the internet, compounding. Coinbase went public in the US for, I forget what, 70 billion, whatever dollars it was. And it had a bunch of accounts. It had more accounts than Fidelity and Robinhood put together. I guess what I really want to share with you guys is resistance here is futile. This is coming and it's not going away. Is there going to be some bubbles? Are there going to be some people talking crap about it? Yes. But at this rate of growth, it's going to eat up a lot of different industries.
Powerful. You want to take a couple more, dude?
Sure, I got time.
Feels like you're slamming him.
No,
you gotta pay him extra. Okay,
what are some of the ways? I like this one. What are some of the ways you earn crypto outside of mining? So I don't mine. What I do is within the Cardano ecosystem, and that's the only thing I do because I've done the homework. Again, understand there's 8,000 tokens, a lot of homework to do. So within the Cardano ecosystem, I stake my tokens that stay in my wallet, and I allow them to process transactions. In return, I get paid 5 to 6% per annum for that, paid out every 5 days. But every 5 days, I get paid out in the ADA token. So my goal is to end up with more tokens. So as I hold this investment for 3, 4, 5, 10 years, I end up with more tokens without taking any risk. Now, sure, there's price appreciation risk, and there's risk that I lose my password, but I don't take risks that they could lose the money. Now, if you're giving up your, you have to send somewhere else, that's a whole other risk that you have to choose whether you want to take or not. For me personally, I'm not comfortable taking on that risk, but there's some people that do. They want to lend out their cryptocurrency to somebody else through a protocol and make yield on their currency, but that yield comes with counterparty risk. And at this point, for me, I don't need the counterparty risk. So that's how I do it personally.
I'll say what's powerful is this may seem like it's fairly aggressive, guys, but Ray is a very conservative dude. So if Ray is so obviously a big conviction level within Ray, you can see him like the way he speaks on this stuff. So you got to start really wondering, this is a conservative man, not some kind of like risk-taking, aggressive, risk-seeking personality.
At all.
So
At all.
When Ray
but I also realized that I played the game too conservative, right? There was nothing in I was almost irresponsible because there was nothing in my portfolio ever that had the potential to 10x and 20x unlevered. No debt. This has done that. I've been up 20x here in 6 months. Guys, 20x. Take a number in your head. 100 G's. $2 million in 6 months or less. Plus, you're getting new tokens every 5 days minted. I
love you, man.
Go ahead. Oh, okay. Thank you, man. I don't know if you had a question, but what I want to share with you is they correct to the exponential mean. They don't correct to the mean, they correct to the exponential lower, right? So it goes from 20x to 10x, but you're still up 10x. So the risk, I guess what I'm sharing with you guys, the reason I got into this is because the risk reward makes sense. And I didn't have anything in my portfolio that I could take a small allocation, 1%, 5%, and get those kind of returns where if I lost it, it wouldn't matter. But it had to be big enough where if it hit, that it would be material. So a lot of guys say, hey, I'm going to put up I'm going to put $1,000 in this. And if your net worth is $1 million and you put $1,000, that's not going to move needle for you. So it's got to be big enough where if it 10x's, you're like, okay, but but it doesn't derail you if it doesn't win as big as that. Does that make sense? So that's how you want to think about sizing. But I am cash flowing this thing and I don't use leverage. So and there's other protocols that I'm sure you could do that. I only do the Cardano one. And in terms of who I stake with, there's a company called 1%, 1PCT within the Cardano ecosystem. And that's who I delegate to. And they do all that work, meaning I let them use my tokens while the tokens stay in my wallet to process transactions. And they pay me, matter of fact, payday's tomorrow. I track that payday every 5 days. Every 5 days, I look at my wallet, more tokens, got more tokens. And I can sell those tokens anytime, right? There's no lockup in the Cardano ecosystem. I can sell them anytime. Now, other ecosystems have you tie up your tokens for a certain period of time. Not right or wrong, just different. Oh, one last thing that's really cool. In different protocols, you can actually send them your tokens and they'll let you borrow against your tokens immediately, same day, same minutes, dude, 10 minutes. I send them my tokens. They say, hey, we'll loan you 20, 30% of your tokens at 1 or 2% a year. So if you ever needed liquidity, you don't have to sell. Let's say you're going to have a tax situation. Well, then you don't have to sell. You could get a loan against your assets and borrow that money. Makes sense, guys? There's a lot of ways to play this.
That's actually kind of interesting because, and I'll just touch on that for a second. So you're saying if I have, let's say, 1 million tokens, regardless of its current price action, I can borrow against those 1 million tokens and do whatever with that money, right? And then the 1 million tokens can stay exactly where it is. So it's not really conditional I guess how much of it is conditional upon the current price action of the token versus them just giving you? Is there a representation?
Well, the protocols I've researched, because I want to research the protocol to make sure it's a legit protocol, is one called Celsius. That's and again, guys, I'm not being picky. I'm just giving you the ones I've done my homework on, because otherwise I sound like an idiot. The ones I've done my homework on, Celsius will let you borrow 25 to 40% leverage of your asset value. If the asset value drops, then you either have to put up more collateral or lower your or pay some of that back, right? Either one. So, but the rates, they're still paying you money on your, so let's say, Ben, you had 1 million tokens of, let's say, Cardano. You send them the tokens, they'll say, hey, Ben, we'll give you 250,000, 200, let's say it's $1. We'll give you $250,000 US, so you can use whatever, for whatever you want. All right, cool. They're gonna pay you 5% on your tokens because you sent them your tokens as collateral. So they have to pay you on your money, and they're gonna charge you 1%, plus your 5% over here compounds. You're borrowing simple interest. You're compounding over here. Make sense, guys?
Amazing. Amazing.
Yeah. Now you don't have access to 100% of your capital, but still, 25%. So, and you're pretty much insulated from risk, because even if the market drops 50%, they might raise the rate on you, or lower the LTV, but you're still it's a safe loan for them, and it's a safe deal for you.
Love it. I love it. Dude, there's a lot with this space. You guys, a lot of value in this. Should I try to get Ray to come back and help us with this? Me and Ray are working on some stuff. There may be some additional chances to kind of talk on this stuff, conversations, etc. So
and guys, I'm a student here too, dude. Like I stopped doing real estate. I mean, I'm always looking for deals. It's just this has gotten, when something you put in a certain percentage of your net worth and it 20x's in less than 6 months, and it outdoes everything you've ever done in 16 years in real estate. This has outdone everything I've ever done in real estate in 6 months with none of the work. And again, I'm not trying to brag or boast, I'm just giving it to you guys real, and I'm still learning. So I'm a student too. I learn every day. I'm always listening to stuff. My wife will tell you that she doesn't really appreciate all that, but I'm always learning. And I'll share with you what I know, and what I don't know, we'll figure out together. But I'm a student of the game. As much as I love to teach, I teach that which I most need to learn.
Let me lend you some money before my wife leaves me, okay?
Say it again.
Paul, you got
Let me lend you some money before my wife leaves me, okay?
I hear you. I hear you.
Ray, where's the best place, Ray, people can connect with you beyond today's convo? Obviously, we'll have you back. By the way, when I first started, when I had Ray on the last time, is when he was first getting involved in this. Now it's been 6 months, big change up. So a lot of success in this space.
Yeah.
Ray, what's the best place for people to reach out to you?
Man, I'm on Facebook, Ramon Gonzalez. I'll put in my name there so you can kind of, put it on there. And obviously you can connect with Ben. You guys are in his group. And I think Ben and I are working on putting something like this together for real estate investors. Because once I learned, guys, that this wasn't just an appreciation play for me, that I could hold it, not take leverage, and then cash flow it, very low risk, then it became compelling. Because guys, at the end of the day, I don't care about the wheelbarrow. My wife, God bless her soul, when she goes to Tory Burke and buys those beautiful sandals that I love on her, she never asked me where the money comes from. She never asked me where, did I get it from a real estate deal over here? My daughters either. When I go get ice cream with them, they never ask me. So if I can make cash flow in a way that doesn't take up my time and it works without me, that's why I got into this.
Ramon, give me 30 seconds of my time. Hey,
sure.
If you want $1 million, do $1 million of my wife's funds. My wife says I don't care where it comes from. Okay.
I can't. You're Ben. Is it just me, or I can't hear? Maybe he could type it. I can't. He's breaking up.
Yeah.
Now he dropped.
Yeah, he dropped.
Yeah,
if you guys have any other questions, Ben, but I think it seems like a lot of your audience is into this. And again, guys, this is going to take time. This is going to take a transition, but I want you to think of this as going to a whole other world, as Christopher Columbus leaving one to the other. You can stay in the traditional world of real estate and everything else, but understand it will get tokenized and it's going in this direction. So I think a diversified approach makes sense here. and it's still early and starting to learn and really have the neuroplasticity in your head to understand these concepts. And guys, I am not techie at all, like at all. But I realized, again, this in 6 months without any of my work. Now I've put in work in terms of learning it, but in 6 months has done everything I've ever done in real estate.
Love it.
Pretty powerful. And more cash flow too, with less headaches.
Love it.
Even the lending. This has done that.
Very powerful.
So
Ray, I just want to say thanks, man. This has been an awesome call. I think we'll definitely book another session here because there's a lot of questions. I'm sure we can go on for hours on this, but I'm going to dial in. Connect with Ray on Facebook. I've known him now for a few years. Facebook, we'll put his name up, get his contact info over to you guys. And I don't like learning from everybody about everything because I think it's a waste of time. But when I find somebody who really knows something, like I said, Ray's obsessive. So if it's the right thing, dude, Ray will get the answer on this stuff. So I trust Ray. I trust his homework. And I know firsthand, of his credibility. So just Ray, we just want to.
Ben, you were in my house. You see me buy it. You see me. You're like, Ray, what is he doing? What is he doing? And then like 6 months later, it's like, hey Ray, that thing you were doing, you think I can get in on that? You're like, damn Ray, I didn't know it was gonna 20x like that, man.
I didn't know. I'm a slower adopter than most, which is hilarious. But yeah, Ray showed me the light.
And guys, I have great friends and great mentors in the space that have helped me see this too. So it's not that I've kind of figured it. I'm not God. I'm just a guy trying to figure things out. And I've had great people help me. And thanks to them, I'm here and I can share. And I don't know everything. I'm a student. I'm a practitioner. And whatever we don't know, we can learn together. But I'm definitely still learning here. I'm a student.
I love it. Well, appreciate you, Ray. Thanks everybody for being here. We'll let the stream roll for those of you guys want to hang out for a few minutes and maybe digest some of this stuff. And we'll definitely be connecting with Ray in a future session. And I'll give you guys some more contact information inside of council, how we can plug in with Ray, because he's got some stuff always on the go. Ray's also got a newsletter on his email. Ray, where can they get going on the emails you sent out? What's the best place to subscribe for that, buddy?
Oh man, I don't even know if I have I don't even have a website. So they can ping me. I mean, I'll put my email on the chat and then you guys can send me your email and I'll add you if you guys want. Oh, we have a podcast you guys can listen to. It's called Both on Board. My wife and I used to do a podcast. It's still, you can listen to it. It's called Both on Board. And, it's, we talk about life, building business together, freedom, because we built these businesses together. Now it's me more on the crypto side because we had our second daughter, but everything else we had done it together, much like Ben and Dre. So it's just been a blessing and she's my, my best gift at all, for sure. And I'll send you guys my email now and you can feel free to reach out to me and any way I can help you, let me know. And again, Ben, the more we do, I think the more that, your group wants to get in on this, I can share the opportunities that I've done my homework on. The ones I don't know. And I'm more of a guy, I like to go deep with one or two companies than go wide because there's just so much to learn here and I only have limited time. And the fact that the two guys that I know the most, that know the deep in the space, converge on these 2 or 3 companies tells me something, right? You don't just that doesn't just happen. There's no coincidences. The fact that 3 or 4 different crypto experts that I know and trust converge on these companies from their own analysis, and then I also validate it, gives me more conviction.
Yeah, thanks again, Ray. Really appreciate the combo. Guys, we'll get you plugged in. And listen, make sure you follow. Like Ray, you're on Facebook. Reach out to him. Guys, I'm bringing valuable people that I know in my network back and on a regular basis here going forward. Because I want you to see what I see. Sometimes for me isn't enough. And I'd rather
Ben wasn't buying it when I was buying it. I was telling him, hey, Ben, you want to get in? He's like, nah, Ray. He wanted to wait till it was higher price. I said, all right, Ben, you come around.
That's right. Ray's always trying to pressure me into doing stuff. Hey, you want to go streaking in the park? Nah, I'm good. You can go with Sean. Sean will do it. No problem. Like Sean does it for fun. That's how you met Carly, right? Amazing. You guys are amazing. If you got to leave, roll for next call. Have a great day, everybody. If you want to hang around and kick around, we'll be here chilling, talking. And Ray, just once again, let's give everybody like a big old thank you to Ray. Bring your audio on real quick. Say thanks, Ray. Here we go. 1, 2, 3.
Thanks, Ray.
Thanks, Ray.
Thanks, Ray.
Thank you.
Muchas gracias.
De nada.
All right, see you guys. I got to take off. Peace.
Later, guys.